What's the difference between a repayment and interest-only mortgage?
Yeah, so when you borrow money for a mortgage, say for example £100,000, if you're on a repayment mortgage, you will be paying down the capital, so the £100,000 over the years, as well as the interest that accrues on that £100,000 mortgage. Okay, so because you're doing that, your repayments that you're paying on a monthly basis will be higher than an interest only mortgage. But you will know that after the set time of the mortgage, that your mortgage will then go down to zero and you will own that property outright. On an interest only mortgage, your monthly payments will be lower because you'll only be paying the interest on the mortgage, but it also means that you won't be repaying any of the capital, which means that after maybe a 10-year period or a 20-year period, you will still owe £100,000 on that mortgage, and so you will now still need to be able to find a method of clearing that mortgage at that point, or you're going to have to sell that property and potentially downsize. Now, interest only mortgages were a lot more popular historically. These days, it is still possible to get an interest only mortgage, but it is much harder than it was previously due to the protections in place to protect consumers. So these days, if you've got an interest only mortgage, you normally have to have a lower loan to value, effectively a bigger deposit to put down to have that property, and often you need to be earning a higher income with the ability to prove that you can afford to repay the mortgage through your earnings if possible as well. So yeah, most people these days will get a repayment mortgage.